So this much
Okay.
amount will be my total risk. And if I touch this
So
particular,
I can see this class afterwards also, is it? If it's recorded, how's?
no, no, I'm recording for myself.
Okay, okay.
We are building something which will be inside our website after a few days or months. There you
Mm-hmm.
will have other recordings where you can come and revisit and see it.
Okay.
We are building that. Okay. So, okay, what I was saying is total capital risk allotment will be done first. And the major reason why we are doing that is to bring up a discipline in the trading or investment thing. So once if that said percentage is being touched by you, you have
Mm-hmm.
to exit the market with the rest of the amount, right? This is what many people will not do. For example,
When you think that this is the highest it's gone.
yes, you have to exit, let whatever happen. Hmm? Because when
Mm-hmm.
you start losing, right, that mentality develops of making or getting going more aggressive.
Yeah, more and more money.
So big hedge funds and other players, how they do is they have a contract which states clearly that more than 10% of risk they cannot take on any individual accounts. That is the
Mm-hmm.
first thing they do, right?
Okay.
So
Mm-hmm.
they divide that into smaller risk parts, and that smaller risk parts can be asset differentiator also. For example, a 2% risk on stock, or 1% risk on commodity sector, and all those things. And then
Mm-hmm.
that will be further divided into per trade or per investments. So in that 1%, that 0.10, 0.20% will be divided as a per investment risk or something, right? So main motive is you should not get out of the market in a single stroke.
Right.
Slowly, right? If 1% you are taking, it would require you 100 investments or 100 trades to go out of a market in a stretch,
Right.
right? So that is the main motive. Then this covers money management. Whatever I talked now
Mm-hmm.
includes money management and position sizing in that. And the fourth thing is maintaining your trade record. So I will be giving you a Excel sheet during
Okay.
fourth or fifth class. So once you
Mm-hmm.
start trading and developing yourself as a trader and investor, you have to maintain your trade records every single time you do. And you can develop a better habit of sharing it with me and having a discussion on that. What will happen is over a period of time in 6 7 months you will start getting into the real professional way of doing this, right?
Right. Right.
Then you can come up with your own idea, you can create your own trade records and all, or trade log sheet and all. Fine.
Mm-hmm. Correct. So, what are the difference between the stocks and futures?
Yes, we will
Um,
discuss all those things.
okay.
From stocks, uh, just a second, I will tell. From stocks, they have derived some products. Fine. The base product is stock. So whenever the stock value changes, right, these derived product also changes in value. Okay.
Mm-hmm.
So for example, Ambani has that Reliance stock belongs to Ambani, right?
Right.
So every single time a person purchases from Ambani, I mean Reliance, that purchase history goes to the register of Ambani, and then it comes back to you as a stock in your demat. Fine.
Okay.
So now what
Mm-hmm.
exchange did, they wanted to increase their revenue, exchange, right? So they
Right.
derived a product from this stock, which is called as future and option.
Mm-hmm.
So there is a thing like if you buy a future contract for after 3 months, you think this stock value will go up, and you want to buy now, but you don't have liquidity.
Mm-hmm.
So with limited amount, you can buy that thing right now. After 3 months, you're
Okay.
thinking stock will go from 500 to 800. I will buy right now, and by that time, I will sell it off to someone else.
Mm-hmm.
Or if you want, you can even buy the stock worth of that much amount. For example, a 10 lakh product you can buy for 1 lakh, right? Right now.
Right.
That is after 3 months, you are thinking it will go up. So after three
Mm-hmm.
months, whatever the real value was now for today, you can pay that
Right.
amount. Rest is your profit. So 10 lakh you can pay that time and you can buy the real stock and take it a position. Or you can just flip it around to someone else. What happens in real estate, right?
Right.
Something
Right.
like that. So same way option is also there. They are two products derived from stock. So we call that as stock future and stock options, right? So same way, commodity futures are different thing. Everything is different. The commodities may you will get crude oil, soybean, gold, and all those things. Everything has a reflection of their spot product, right? We say na gold spot market spot product. So with that,
Okay.
they have derived the future contracts. Okay.
Oh, okay.
So trade journal you can download from here if the link is
And
working.
how about the taxing? Suppose I just buy some shares and want to sell it in 1 or 2 days. How the taxing would be?
It would be automatically gone from your broker side. They will debit it. I don't know the exact percentage because that
Or they'll
much.
debit the tax immediately, is it?
Yes, yes.
Okay.
Stamp duty tax and other type two, three taxes are there. That is how the exchange makes money. Even
No, I'm talking about income tax.
income tax you can file later. You
Okay.
can
Well, do you know how much is the percentage?
income tax thing and all. Actually, I have to ask my auditor regarding that.
Okay.
Okay, because we always show that we are not making anything. Uh-huh.
Okay. Okay. Okay.
So who goes for income tax and all now? Means people are there who do regular audit and all. So that
Hmm.
you will get separate auditors for what is your actually what is the amount that you're going to invest by the
I don't know. Initially, I'm thinking about 10 to 15 lakhs, which I want to, maybe invest. I'm not sure. So next few days,
way?
I'm
No,
going to
what
decide.
I will say is you can start with a mere 1,000 or 1,500 rupees first.
Okay. Okay.
Okay, and first grow with that amount.
Okay.
If you are able to do that, then invest little bit more. So it is a
Okay.
process that will fine tune, fine tune, fine tune for you till next 6 months, then another 6 months. And once you do that, you will start understanding the psychology of market and other players. Then you
Right.
should invest 10, 15. Before that, if someone gives you money, also don't invest.
Okay. So no, no, that is my long-term plan.
Uh,
So
the
yeah.
best thing is start with 1,000, 1,500. We will come at that. So that is how you should start.
Okay.
Because
Okay.
many people start with a big amount and it goes in vain. Fine.
Right. Right.
What happens now? People start getting overconfident after seeing one or two profits. Array, if
Correct.
it's like this, we will do like this. No, don't do.
No, I
Fine.
was just thinking. Suddenly, the market is increasing now, so that's the reason I thought. But yeah, the whole idea is I want to learn, so it's
Yes.
okay. I'll start with a small amount.
If you feel like doing that, market is increasing. Why don't you put a 500? Market will again drop after some time. Again, it will increase. Don't worry.
Mm-hmm.
Okay. So, what is the difference of learning with me and why you should not learn with others? So, I will tell this as the unique selling point with us. There are something called as indicators. Have you seen
What is it? Indicators.
indicators?
Okay.
So, some sort of thing which shows you whether to buy or not. That is called indicator. Okay.
Okay.
So, we don't use any indicator and all. We purely trade based on the price action. Fine.
Based
Then
on the price.
price action. Price action means depending on the price behavior, price movement, we play it. We play the market. Okay. So first
Okay.
price change happens, then only these indicators show you indications. So
Okay.
we don't like actually we really don't like that and we don't trade. So later on I will show how indicators are being used and what is that. So second thing is whenever you enter an investment or trading decision, right?
Right.
We call this as set SET means stop loss entry target. If you don't know any one of them, you are not entering it. That's it. Why?
Stop
Because
loss, entry, and exit. Okay.
exit I have written, you can call it as set, SET, stop loss,
SET.
entry, and target. Okay. So, for example, you think you're going to buy a stock which is right now at 100 rupee, and you're thinking it might increase, right? So the
Right.
question is, let it increase, let it go anyway. But what is the price that it comes down and I get this much loss and I should exit? That should come first. So from
Okay.
100, if you are investing in 1,000 stocks, let's say 10,000 stocks you're buying. So 10,000 stocks you're buying means you are investing 10 lakhs, right? So from
Right.
100, if it comes to 90 per stock. Okay, so you're losing 10 rupee in one stock. You invested in 10,000. So easily 1 lakh rupees is gone.
Right, right.
Okay, right? So you should know that stop loss. Okay, I will exit at this point no matter what happens in the market. And entry point 100, how you identified? You use some metrics of technical analysis. You identified 100 is the crucial price where you should buy. Simple. And then
Okay.
using some other metrics, you should know that, okay, it might go up to 200. Your mind, how it should work is there are big players and small players in the market. Okay.
Right,
So
right.
the players who can time it better and the plays, exact plays where people will book their profit, right? That
Right.
will come in your mind automatically after few days or few months. With me, that is the thing that will trigger you. Okay, at 200 or 250 they might book their profit. So
Mm-hmm.
that thing you should know. So stop loss, entry, target, these are the
Okay.
three defined thing that is a must in a trade and investment. Fine.
Stop loss, entry, and target. Okay.
Stop loss, entry, target set. Third thing, position sizing is done as per allowed risk percent in your account. So I talked about this before, right? This I have covered already. How position sizing in that sense?
Sizing is done.
Position
Okay.
sizing in the sense, if you are allotting 1% and that 1% comes to 10,000 rupees, okay, and that entry which you thought you will buy a stock at 100 and at 90 if it goes you will exit. So 10 rupees is what you are going for one stock loss, right? In one
Okay.
stock
So,
you are
so you're
losing.
saying if I bought it at 100 and by chance it goes to 90, then I have to exit.
Exit. But what, how many quantity should you buy at 100 is what we are going to discuss.
Okay.
Your total risk that you decided was 10,000.
Right.
Total risk per investment should be 10,000. You decided. Okay.
Okay.
And at 100, you want to buy. But so that 10,000, how many stocks if you buy? If you buy 1,000 stocks, right? And
Right.
if it goes to 90, your 10,000 is reached, right?
Right.
So some stock might be at 300 and it might go to 290 or something. There also 10 rupees is being depleted. You are losing the same thing, but number of quantity will change because it is 300.
Right. 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 Right.
All those things we will discuss. Fine.
Okay.
And fourth, as I told, we will be maintaining the trade records, trade log. We call it. It is called as trade journal or trade log. So trade that records you have to maintain. So this many people don't do. I usually ask my students to send it across and keep on
What is
asking.
this? We maintain trade records for future reference.
Trade records,
Okay.
yes. For example, I downloaded right now. It is available in my website. I will show you.
Okay.
Whatever you take, for example, the security name, the name of stock, right? Trade
Okay.
type, you are going long or short. Then entry at what price you have entered, 100 rupee you have entered. What is your stop loss? What is your target and date of entry, exit date, which strategy you use to enter. We have little bit, a couple of strategies to use. And time frame is another thing. Which time frame you looked at the daily chart, you looked at weekly chart. What do you look? Okay, how many quantity you
Okay.
got? How many quantity you sold? Now, if for example, if you sometimes what happens, you have 1,000 stocks. Sometimes you exit by 200 or 300 stocks from that, and you liquidate that amount. So then, what quantity is held and all those things. Then your net profit, loss, and lot size is for derivatives that we will discuss later. And
Mhm.
then so many things are there. How much is the total brokerage gone? What is your net profit loss and all this? And total risk on portfolio, how much you took and what was the capital used. So this thing every single time you have to maintain. So if you're trading or sorry, investing with 10, 15 lakhs, right? At least
Right.
7 to 8 stocks will be there and you will be doing it simultaneously. So this will
Mhm.
be a very crucial. So once you are very thorough, you can develop this Excel as a web app or something and you can start using it for your own thing. Okay.
Okay.
That metrics is what will make you a better investor and trader. Nothing else.
So we have to record these trade logs.
Yes, you have to do
Trade
it
logs.
every single time, and every week, every second week or date, one date you can fix. You have to come to that and look at that or whenever you
Oh.
exit from a stock or entry something, right? That thing you should keep on reviewing. That is how you can develop. Fine. So then, just a second. Speak up. Okay. So here there are some strategies we use to identify the multi-bagger stocks. Now, what is multi-bagger stock? A stock which has a potential to multiply itself, right? So a 10 rupees stock might go to 100 in couple of years, or a 10 rupees stock might go to 150. So
Okay.
those stocks have a similar type of pattern which we have identified, and you will be looking for that. So
So these are
yeah,
multi-bagger, is it?
it is called multi-bagger stocks.
Okay.
So there is a similar pattern which we will be covering, and I will be showing that. See, this is the pattern. So you will be able to recognize that. So if you want to play very long-term role and a big thing, right? So you should also go with these things. So easily your 10 lakhs can multiply into 10 times in these type of situations. But only issue is you will get one or two such stocks in a year or 2 year. But
That
that is
the ones which multiplies like this.
yes,
Okay.
yes. So the way how it happens is, let's say some new stock or new company is there in a new sector or something, and they have the potential of becoming the market leader, and their market capitalization will grow
Right.
from just 1%. If that company has a potential to grow, and within 2 3 years, if they do everything right, they can go for more than 50% of capitalization in the market. That's it. They will become the big player, right?
Right.
Easily its stock will grow. So we will cover all those things. So for example,
How do we identify those kind of?
we have a pattern, simple pattern for that.
Okay.
Okay. So for a classic example is your jockey, right? People are
Mm-hmm.
wearing. So it's called as Page Industries. Do you know that?
Page Industries, is it?
Industries.
The company name is Page Industries.
Page Industries.
Page Industries. Okay.
I will show you. This is what the jockey company is, right? So
Oh.
this industry's product is jockey actually. So
So then,
they started in 1994. If I go for max, right now it is trading at 22,000, right?
okay.
So if you come down here at
Hmm.
2007, this was the price, Vinay, 271 rupees per stock.
2007. 271 rupees.
One stock was at 271 when they entered the market.
That was in 2007.
So yes,
Okay. So now in like 12 years, the 20,320 is one stock, is it?
one stock,
Oh, they've gone like more than 10 times, 20,
because
20,
they
100
became,
times.
yeah, they became leader in their sector, right? Now everybody is wearing jockey.
Right.
So at that time they did it. A similar example, another I can show you. It's your Eacher motor, right?
Insurer
Yes.
Motors, right.
That lorry and all you see, right? They also went in the similar type of pattern. From 68, it was in 2002.
Insurer Motors. What do they do actually? What is their product?
That
Motorcycles,
no,
Royal
no,
Enfield.
lorry and all you see, right? Truck, lorry,
Uh,
see na, Eacher motor,
right,
Eacher
right, right,
motor,
right.
those things. So this is another example. Another example is your MRF
Motors.
52. So these are the classic examples of multi-baggers. From 927, it is at 62,000 right now. Okay. So why it became? Simply they capitalized on the market and they became the market leaders.
Market leaders.
The same type of product we can find in the upcoming days or years, and we can also make this much of money out of that. And different people came. Like for example, Bajaj started his finance service. Na? For every product, they started giving loans and all.
Right.
Called Bajaj
Yeah.
FinServ.
Alliance, Bajaj Finance. Yeah. A lot of things. Yeah.
So they were very unique in their thing. So they were at
Oh,
4.5.
almost till 2014, they have not increased much.
So
5 rupees.
from 2002 they are into this. This is different one. Bajaj FinServ is different. I will show that also. So from 5 it went up to 4,000 rupees right now. This is a different one. Bajaj Finserv is different. I will show that.
So the stocks that we are going to do is only Indian stocks, no foreign stocks.
No, same logic applies for everything. You can do anything. Everywhere you can.
Okay, okay.
If you want to trade the US stocks and all, you can have an account with, I forgot that name. Interactive brokers, you can open an account. There,
Oh,
with them you can trade in any type of market. So this is the one. See, 2008 you
Bajaj,
were talking, right?
right, 2008.
570 was the stock price.
Right. Now
They,
it's 8,560.
huh. So there is a sector in this one. The people who do only this, right? Actually, they
Right,
make more money instead of short
right.
term. So mine is
Okay.
also something like this, and long term is what we focus. And sometimes I do trading also. Sometimes.
So you can have a mixed portfolio, right? Long term, short
Yes, it
term.
depends on what risk you want to take and how you are doing it.
Mm-hmm.
Okay. And the broker which I talked was this one, Interactive.
This is for foreign market.
Every market you can trade in this worldwide. They are global brokers. They have an office in Mumbai. They ask for some minimum 10 lakhs or something as your bank balance or something. Then only you can open an account with them, and then
Oh.
you can trade anywhere.
Uh-huh. So why minimum 10 lakhs? The
They have
security.
kept, they have kept something like that. They have, you
Okay.
can ask with them now. They might have changed it. So NSE also you can change, and I will. You can trade in any other thing also. You can. Fine. Then this is something, another thing you will learn in extreme demand. Okay. So demand supply is something, a new concept that you will be learning. So we call some areas as demand areas. So where people are more interested to buy, we call that as demand area. Okay. And where people
Right.
are more interested to sell, we call that as supply area. So technically, the support and resistance is what we call as demand and supply. So we will discuss about this later. It will confuse you now. This also we will
So when
discuss.
they want to when they want to buy, it's demand.
Ha, it is an price area where people are much more interested to buy.
Buy, okay.
That is a
And
demand.
when you want to sell,
Supply means everybody is having it and they want to sell it off. Similar the thing which happens in the other markets, right? Supply demand.
right, yeah,
When
demand.
demand is high and product is low, right? Quantity of the product or availability of that product, prices go up. So we termed it as demand. Okay. Then this is another thing to look. So concept should be very simple. Whatever you use strategy, you learn with me, or you after some time you go and search for something and something. This one clear diagram is enough for your investment and trading psychology. So what happens is in every market, let it be any clothing or any other market, people buy at wholesale and sell it for a retail price, right?
Right.
So same way in stock market also, the lower price levels are your wholesale level. So always when you buy, you have to buy at wholesale.
Okay. So you have
Okay.
something called wholesale price also.
Yes. It's a level, a lowest level where you can buy a good stock. And same way the retail level is a price which is much higher price where you have to always sell. So we will never buy in those retail level. We will never sell in the wholesale level. Understood?
Okay. You have to buy in
Wholesale and
wholesale.
same game you have to play here. So always buy something at the wholesale price and sell it for retail price to others. That's it. This is what the big players in the market do. Who are the big players? Big players are the financial institutions. For example, mutual fund company or
Right.
your hedge fund company or big banks.
Right.
They
So all
play
these are
with,
all
yeah, they
financial
are,
institutions. Right.
they are the one who is in the 1% category who controls this market actually. And they play with people like us
So
when they want.
they are only 1%, is it?
Yes, but that 1%
Okay.
constitutes 99% wealth of the market.
Oh, okay.
I'm talking about that style of trading, that 1%.
Mm.
If, for example, mutual fund company will be investing 1,000 crores or 10,000 crores in a particular thing, okay, but they
Right.
will not exit easily. They will hold for 10, 20, 30, 40 years also, and very
Okay.
diversified portfolio they will have. Okay,
Mm-hmm.
so once a company like that invests in another company, right? They have lot of reasons to invest. They're that analyzing of the company, right? That is very in depth.
Mm-hmm.
Everything they
So they
will.
have professionals for that.
Yes, and we will use that for our thing also, and I will show you how we will use that. Okay, so if a company they have purchased mutual fund, they have entered at 20, 30, and after 10 years or 15 years, they are exiting from a level, right?
Right.
Before that, what will happen? You will start seeing newses of those stocks that it is going up, it is happening this, and news channel will say buy this, buy that. Your broker will send you a message. This is a good stock to buy now. What is happening is they are actually liquidating their amount. They will,
Right. So they're going to sell.
yes, they will pay the news channels and everything. They will ask them to put like this, and that is how they exit.
Mhm.
Huge quantity, na?
So when will retail level go? I mean, can we predict when the retail level happen?
We cannot
By
say from the starting, but after seeing something, we can say. After seeing some
okay.
price actions, we can say, okay, this might be the exit from them.
Mm.
Okay, and we will use their thing also. Means we will use how whatever we know in our investment and trading thing. There are few
Right.
things, Vinay, that you will learn. Like that will be a trigger for you to exit from the market.
Mm-hmm.
That happened. That's it. We are also exited. Okay.
Okay.
So this was a little introduction. So next class, little bit basics we will see. Okay. So I
Okay.
will walk you through financial market. What is financial market? What is your stock exchange? And worldwide, what is happening? So transaction, what
Mm.
is transaction? And these things we will look. And then we will start with the technical analysis. Okay. And after technical analysis, we will get into the fundamental part also. So this is
Okay.
the entire thing. What you're going to learn, I will come down. So this is
Mm.
all theory part.
Okay. So will I get the slides as part of the material?
No, you won't get it. The other format videos, we are preparing it, and that will be available for you in the website in a month time or 2 months time, which will,
Okay.
you will have your own login details and all, and you can view it, and you can refer them anytime you want. Fine.
Okay.
Okay. So I can end right now. I'm ending it. Fine. And
Okay.
next
Okay.
availability whenever you are free, let me know.
Yeah, I think Monday we can do it because tomorrow day after I'm not there. So
And a quick review. How did you like the first session?
it was good. So it's very interesting. So I hope I learn a lot of things and go slow. I initially maybe I thought I'll put a lot, like, but like how you said, I think I'll just go slow and learn it, and then
Yes. So did you expect this much level? At least you will be something looking at something like this today's class.
yes, yes, yeah. I expected it actually.
Okay. Fine, Vinay. Thank you. Monday you can confirm with the timings and we can connect again.
Yeah. So I'll just let you know sometime by Monday afternoon. That should be fine.
Yeah, fine. It will be fine.
Okay. All right.
Okay, Vinay. Thank you.
Thanks.